Well, a rare change is happening to the S&P 500. The index is getting its first new sector since roughly the dawn of the dot-com era. Real estate investment trusts, REITs, one of the hottest investments of the past decade, now will have their own classification. How nice. Bob Pisani walks us through the change and what it means to investors like you.
The S&P 500 is getting a facelift for the first time in almost 20 years. Since 1999, the S&P has been divided into 10 sectors, including technology, financials, healthcare, and energy, among others. But starting today, there's an 11th sector, REITs, or real estate investment trusts. REITs are stock companies that own and operate real estate on behalf of their investors. Everything from shopping malls to office buildings to personal storage units. There's been growing interest in investing in real estate as a separate asset group, particularly since REITs throw off high dividends that are very attractive in a low interest rate environment. The 27 REITs in the S&P 500 have outperformed the broader market this year. REITs were part of the financial sector, but it never made much sense to include them in that group. Real estate has different investment characteristics than bank stocks, for example. So for all the above reasons, Standard & Poor's has created an 11th sector for REITs. REITs are now 3% of the weighting in the S&P 500. That doesn't sound like much, but materials, telecom, and utilities are also 3%. Of course, real estate investors are hopeful that this will spark even more interest in investing in this asset class. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.